This instructional video is an overview of the Income Statement Worksheet tab. This page is a detailed income statement that is an essential part of your financial plan to help you plan and understand the profit and loss of your business plan. Nearly all of this worksheet is completely automated with very few configuration steps required to make it fit your business model. Most of the information is fed into this page by other worksheets that detail the sales and staffing assumptions that make up the bulk of the information that drives the income statement. The instructions at the bottom of the page will walk you through the few steps required to complete this part of your plan. When you first open this worksheet tab, you will find it grouped and collapsed into a summary annual view. To drill into a more detailed view of the plan, simply click on the plus sign on the top of the column or click on the number 2 and go to the next level of detail at the upper left corner of the worksheet. This allows you to see the month-to-month build-up of the plan, which is really critical to enable you to track when your revenue is recognized, when your costs are experienced, and when your plan breaks even. As you continue to scroll to the right, you will see the quarterly and annual summaries. Most business plans include only an annual forecast, which is woefully inadequate. And investors and lenders will agree. As an active angel investor, I would never invest in an early-stage business without a really firm grasp on their monthly operations, a detailed understanding of their assumptions, and a full awareness of how much cash they will consume prior to break-even. As you scroll down the page in the summarized view, you can get a quick grasp for the overall income statement. And to see the detailed view, simply click on the number 2 or the plus sign to the left of the rows to see cost detail that is appropriate for nearly any kind of company. While the summarized view is very helpful, any entrepreneur, management team, investor, and lender will want to understand each cost bucket and those cost drivers. Notice that we have the expenses broken down into 2 major groups, direct costs and operating expenses. Direct costs are those that are variable in nature and are driven by the volume of business or revenue that your plan expects, while operating expenses are those that are typically fixed in nature and are often called indirect expenses or overhead. These operating expenses will typically not scale up with revenue, but come in a more chunky fashion as you hire additional management team members, hire new back office employees, lease new office space, or incur other expenses that cut across the entire business regardless of the amount of revenue. These operating expenses in the model are broken down into 2 groups, sales and marketing expenses, and G&A, or general and administrative expenses. To make it really easy to plan and understand, these expenses are categorized in a similar fashion and in the same order, except for a few items that are unique to each category. Many entrepreneurs and management teams make the mistake of creating too many expense lines for each vendor or cost category, but that will often make the result harder to interpret. Expenses of a similar nature should be grouped together. As we continue down the page, you will note other income or interest income and expenses recorded, the income taxes, and then net income. We are also reporting EBITDA, earnings before interest, taxes, depreciation, and amortization. EBITDA is one of the most common earnings measures as it shows a baseline operating profit without taking into account how a company is financed or its tax structure. EBITDA as an earnings measure is the best way to compare the earnings of different companies as it levels the playing field to really get to the heart of the earnings picture. The next section on the page is a summarized view of the plan in a percentage-based or common-size view. This will give you and anyone reviewing your plan an easy sense for the major movements of your plan over time, especially in terms of the proportionate cost mix and profitability. In our assumptions section, we've captured a few assumptions that are important to note in terms of interest, taxes, and bad debt expense. These assumptions are entered into the Scenario Analysis tab to allow you to quickly see the impact on the entire plan of various assumption changes. Please see our separate blog post on entering these assumptions and how to think through them. Below the assumptions section, we have 2 pre-built charts that visually give you or any reviewer a quick graphical view of the overall profit and loss picture of your company. The instructions section at the bottom of the page outline the easy steps to configure this page to fit your business model.